Bitcoin savior or the market's next big risk? I'm talking about Michael Saylor. Today we're going to examine what might happen to the market if Michael Saylor's shareholders face bankruptcy or decide to sell off their Bitcoin. Stay with me until the end of the video. We're going to review some very interesting points together. And don't forget to like, comment, and subscribe. By the way, don't forget to introduce us to your friends and give us some energy. Regarding Michael Saylor, everyone says he's a genius, the market savior, the one who rescues the market. But what if this very person's downfall could end up affecting the entire market? To start, let's go back to the fall of 2022 and the whole FTX saga. Back then, FTX was the symbol of success in the crypto world. SBF had built the image of a young genius, someone who is saving the industry from crisis. But behind the scenes, customers' money was being used like Alameda's personal capital. As long as there was trust, the system stayed alive. But then suddenly, the spark of fear was lit. A few tweets and a few reports caused the wave of withdrawals to begin. The market crashed because of the fear of a crash. Sometimes the market doesn't collapse because of reality. It collapses because of the fear of reality. But let's get back to MicroStrategy and Michael Saylor. MicroStrategy is the largest corporate holder of Bitcoin. It holds nearly 846,000 Bitcoin, which is 4% of the total 21 million Bitcoin supply. So we're talking about a very significant number here. This number is both extraordinary and terrifying. Concentrating this much volume in one company's hands can become a systemic risk in a crisis. What is MicroStrategy's model? Selling stock, raising capital through those sales, buying Bitcoin, price growth, higher premiums, and finally repeating the cycle. But what if this cycle starts to go in reverse? But from 2025 onwards, MicroStrategy wasn't just moving forward with low-cost bonds. Preferred shares with fixed interest entered the game. Three sources of liquidity: selling stock, raising new capital, or selling assets. But the interest rate for preferred stock was set at 8 to 10%. Interest that must be paid to investors monthly, and finally annual obligations, interest payments, and related commitments during the year. When you have cash obligations, just having faith in Bitcoin isn't enough. You also need to have actual cash on hand. This is where the "never sell your Bitcoin" slogan gets complicated, and survival becomes much more important than ideology. But now let's examine whether MicroStrategy is similar to FTX. Their main similarity is trust. A direct comparison is legally incorrect, but both are only alive as long as the market has trust. When markets sense that a big whale might sell, they start selling even before that whale does. But if I want to make a more precise comparison, FTX misused customer funds. It had non-transparent financial operations. A lack of regulatory oversight led to a sudden sell-off and a sudden crash. But MicroStrategy is a public company. It has transparent reporting, regulatory oversight, and a well-known model from the start. But three questions arise. What if MSTR doesn't have a premium? What if it can't attract new capital? What if it's forced to sell Bitcoin? In the face of all crises, MicroStrategy has only three options. Selling more shares. It brings in liquidity, but current shareholders get diluted. Each person's share of the company's Bitcoins decreases. More bonds or preferred shares. If the market lacks confidence, the cost of financing goes up. It has to pay more interest. And the third way, selling some of the Bitcoins. This is the most sensitive option. For a company whose ideology is never selling Bitcoin, selling isn't just a financial decision, it's a psychological blow. In financial markets, sometimes the message itself is more important than the numbers. And considering these three options we've discussed, selling Bitcoin is the most likely because it's easier. Bonds or preferred shares with higher interest require liquidity. Selling more shares also requires trust. In this period or future bearish and downward markets, these two options will likely be harder than selling Bitcoin. Now let's talk about why this issue is important for the entire Bitcoin, altcoin, and cryptocurrency market. It's not just about the volume of sales. Some say the Bitcoin market is deeper today and can absorb MicroStrategy's selling. That's absolutely true. But the main issue is the psychological impact and the shift in narrative. The market moves on narratives. Just as FTX began to collapse with a narrative, triggered by a few tweets and reports. The constant narrative is that Michael Saylor is always buying. But the dangerous narrative is Michael Saylor has been forced to sell. In his last interview, he even said, "I told you not to sell Bitcoin. I didn't say the company wouldn't sell its Bitcoins." And we have three scenarios ahead of us. Scenario 1, Bitcoin growth. It starts going higher from right here. The pressure on MicroStrategy is lifted. The premium returns and the buying model continues. The best case scenario for Michael Saylor and MicroStrategy. We call the second scenario the gray zone. It's not considered an immediate crisis, but it means MicroStrategy's previous model no longer works and the cost of financing becomes more critical. And in the third case, we face those same three options. Selling shares at a lower price, bonds at a higher rate, or selling Bitcoin. None of these are easy. That's why the third scenario leads to a serious crash. But given these conditions, should we be afraid of Bitcoin at this point? Not necessarily. Strategy risk doesn't necessarily mean Bitcoin is weak. Bitcoin existed without strategy, and it will continue without it. But the FTX lesson tells us that even after the FTX collapse, although it was very painful, the market became more sensitive to transparency and risk management, and it taught us a lesson. And this is very important. Earlier risk is always better. Maybe it's better for the market to eliminate its risks before this structure grows larger, and maybe this cycle provides a good opportunity for a Bitcoin crash for us. For those same lessons FTX taught, let MicroStrategy give them to us this time. And the most dangerous sentence in the market is this. This time is different. As we said, Michael Saylor has become a historical figure for Bitcoin, but no hero should remain unquestioned. And the points we need to learn from this matter. Don't look at the purchase number. See what money was used for that purchase and what commitment is behind it. Second point, look at the concentrated risk. The market shouldn't over-rely on one person, one company, or one specific model. And finally, the third lesson is realistic optimism, meaning you should see the risks too. Maybe today's pain is better than tomorrow's major crisis. Thanks for staying with me until the end of the video. Don't forget to like, comment, and subscribe. Give us energy so we can make more videos for you. Regards.